Hey everyone, welcome back to the channel. Let's talk about something we all get a little excited about, tax refund season. That feeling when a nice chunk of change hits your bank account is pretty great, right? But have you ever stopped to think about what a tax refund actually is? A lot of people think of it as a bonus from the government, like a free gift. Well, I'm here to tell you that's not quite right. A tax refund is actually you getting your own money back. Think of it this way, throughout the year, your employer withholds a certain amount of money from each paycheck for taxes. This is basically an estimate of what you'll owe the government. When you file your tax return, you're telling the IRS exactly how much you earned, what deductions you qualify for, and what your actual tax bill for the year is. If you paid more in taxes than you actually owed, the government gives you that extra money back. That's your refund. So, why does this overpayment happen? It's often because of the Form W-4 you fill out when you start a new job. This form tells your employer how much to withhold. Things like getting married, having a baby, or even getting a second job can change your tax situation. If your W-4 isn't updated, you might be overpaying. Also, you might qualify for certain tax credits and deductions that you didn't account for during the year. These can lower your tax bills significantly, leading to a refund. For example, let's say you earned $60,000 last year. Based on your W-4, your employer withheld $8,000 for federal income taxes. But when you file your taxes, you find out you qualify for the child tax credit and a deduction for student loan interest. After all the calculations, your actual tax liability is only $6,500. Since you paid $8,000, you overpaid by $1,500. That $1,500 is your tax refund. See, it was your money all along. Now, this might sound great, but think about what's really happening. You've essentially given the government an interest-free loan for a year. That's money you could have been using for anything, investing, paying down debt, or just covering your daily expenses. While a big refund feels like a windfall, it's often a sign that you're having too much tax withheld from your paycheck. So, how can you adjust this? You can use the IRS's tax withholding estimator tool online. It helps you figure out if you're on track. If you find you're getting a huge refund every year, you might want to submit a new W-4 form to your employer. This will adjust your withholding, giving you more money in each paycheck instead of a lump sum later. Of course, you want to be careful not to underpay, because then you'd owe the IRS money, and nobody wants that. The goal is to get as close to zero as possible, owing nothing and getting nothing back. Let's quickly touch on how you can get your refund. The fastest way is through direct deposit. When you file your return, you can provide your bank account information, and the IRS will deposit the money directly. It usually takes less than 21 days. If you prefer, you can opt for a paper check, but that can take much longer to arrive in the mail. You can track the status of your refund on the IRS website using their Where's My Refund tool. And what about those tax credits we mentioned? They are super important. There's a big difference between a tax deduction and a tax credit. A deduction lowers your taxable income. For instance, a $1,000 deduction might only save you $220 in taxes if you re in the 22% tax bracket. But a tax credit is a $4 reduction of your tax bill. A $1,000 tax credit reduces your taxes by the full $1,000. That SY credits like the Earned Income Tax Credit or the American Opportunity Tax Credit for education are so valuable. Make sure you're not leaving any of these on the table. Finally, a quick word of caution. Be wary of refund anticipation loans. These are short-term loans offered by some tax preparers that give you your refund money almost immediately, but they come with very high fees and interest rates. It's almost always better to wait for the IRS to process your refund for free. So, to wrap it all up, a tax refund is just the government returning your overpaid taxes. It's not free money. While it's nice to get a lump sum, it might be smarter to adjust your withholding so you have more cash in your pocket throughout the year. Use the IRS tools to find your sweet spot. File electronically with direct deposit for the fastest refund, and don't forget to claim all the credits and deductions you're entitled to. Understanding this process gives you more control over your finances. I hope this helped demystify the tax refund. It's a key part of personal finance, and knowing how it works can really empower you. If you found this video helpful, give it a thumbs up and consider subscribing for more financial tips. Got any questions or your own tax refund stories? Drop them in the comments below. Thanks for watching, and I'll see you in the next one.